Have you ever wondered how some traders can turn $100 into tens of thousands of dollars? If this seems out of reach for you or something that's just not possible, I'm here to tell you from personal experience that that is exactly how I started my trading career. So in this video, I'm going to break down the exact strategy that I use and a step-by-step tutorial on how you can do the same thing as well. So let's get straight into it. Now, before we even talk about strategy, the first thing you need to prioritize is your mindset and psychology. This is going to be the thing that separates the winners from the losers. And if you want to be in the winners category, you need to fix your mentality. Because if you're not patient enough, you're not going to be able to grow that small account slowly. If you're not disciplined enough, you're not going to stick to your trading plan and strategy, and you're going to step out of your rules and lose everything you've made. And if you don't have a consistency mindset, you're not going to be able to stack up those small wins in order for you to compound them. And that is exactly how the real growth is going to happen. You need to know that trading is not about being right once in a very big way, but it is about being right consistently over time. Now, whether you're starting with $100, $500 or $1,000, it really doesn't matter. All of these rules apply to you. Now, I'm sure you've already heard about risk management, but you need to be using it in your favor. For most strategies, you should be risking between 0.3 and 1% per trade. But just for you to know, I've already made a video covering all of these psychological details in another video, which you should watch after watching this one. All right, without wasting any time, let's jump into the same strategy that I used to make over 6 figures. Okay, so it literally doesn't matter which market you trade. It could be the Forex market, crypto market, but I'm going to be showing you the crypto market because that's what I trade most of the time. And this is a trade that I took literally today. So this is a strategy that still works to this day, and I'm using it every single day. So most of the crypto market doesn't really have fundamentals behind it, meaning that most of the crypto market doesn't really move on the value that is behind its coin, apart from some of the major coins like Bitcoin, for example. But the crypto market mainly works on price action and technicals, which is something to consider because depending on your personality, it can either make it easier or more difficult for you. In this case, for me, it makes it easier, which is why I trade it. Now over here, we're on the 1 hour chart. And when I see a coin that's been pumping, I try to figure out where it could potentially reverse. So over here, I zoom out and I go and look for the levels that this could potentially bounce off of, because these coins, regardless of what you're trading, even if it's Bitcoin, it can go up or down 10, 20, 30%. So these are the perfect scalps and the perfect moment for you to catch and ride that wave. Now keep in mind that we're looking for short positions over here, which means that we're going to be betting on the market going down. Now in this strategy, we look for short positions, which means that we look for an entry where we bet that the coin is going to go down. Since this level has been clearly broken, it's probably going to ride a bit more further before it comes down. So we're not going to be entering any short positions in these levels at all. Now, the reason I marked these two beforehand is because you could have a lot of potential sell orders, which is a perfect entry for you to enter into a short. As you can see here, this went down around 14%, which even if you were to catch 1/10 of that movement, you would still be making decent profit. Or this position, for example, which if you held would be going down for around 10%. But if you go down all the way, that's around 20% of short. So if you were to catch even 1/10 of that, you would be making a profit of around 2%. However, we're looking at this on the 1 hour time frame. But if we go on the 1 minute chart and zoom out all the way, this seems a little bit more clear about the movements that it has had. Remember, these two orange lines are the 2 points of interest that we have, where we predict that there's going to be a lot of sell orders because it is a potential reversal. But because it's the first time in a long time that it's coming up to this level, and it's already built up all of these long positions that have entered, it is very likely that when we were coming over here, there was going to be a small or a big reversal happening, which is the moves that we want to take advantage of. Just imagine yourself as someone that was in a long position over here, and you see your position going up all the way for 30%. That is a huge movement. Now, when you reach these points of interest, wouldn't you personally be looking into selling your position? And that is exactly what most of the people that are in these trades are looking for as well. Now, one very important indicator that I use, which is a very basic one, but one that really does work, is the simple and humble moving average. Usually I use 3 to 4 moving averages on different lengths, meaning that the curve and proximity to the actual price that they have are different, which helps me in predicting where the market could potentially go. Just keep in mind that right now we're looking at the 15-minute time frame, and the 7 moving average, which is supposed to be very close to that price, with every candle has a huge divergence here and here. Now, whether you want to trade this on the 15-minute chart or the 1-minute chart, it doesn't really matter, as time frames are fractals, meaning that movements, rules, and logic are duplicated in the 1-minute, 3-minute, 5-minute, 15-minute, 4-hour chart. But when we see a huge divergence between the 7 moving average, which is supposed to be the tightest one, and the actual price, either the price is going to come back down to the moving average or the moving average is going to come back up to the price. So basically in these two scenarios, this divergence and this divergence are perfect entries for shorts in order for you to get a nice clean 5 to 10% scalp. And you can see the same thing that has happened over here with a huge divergence and distance that has happened with the 7 EMA for you to take advantage of a nice short that is probably going to come back down. Now if you zoom into the 1-minute time frame, you can see this more clearly and how this all made sense. Basically my thought process is that if all of these people are buying, eventually it's going to go down. Same thing over here and the same long buying process over here. Another thing that you can see is the more aggressive the buy is, the more aggressive and hammered down the sells are, and the slower the buying purchase is and the time it takes for it to consolidate and go up, the slower the downfall and the shorts are going to be. Now the strategy I use is a mix between many different strategies and indicators, and everything I've said comes with a caveat and exception, so you don't need to take everything I said literally as is, because there are going to be exceptions in the market, and it is possible for you to see something that looks like this but will not react the same, and the price may even go higher. And the only way that you can control not losing your account on this kind of trade is risk management. I have absolutely perfected my risk management for this kind of trading, and that is the only reason why it works. So if I were to again put myself in your shoes and only have $100 to trade with, this is exactly how I would do it. If I only had $100 in my account, I would literally start entering my positions with only $5 to $6. Because no one in the world can ever predict where the price is going to go exactly, your best bet into making the right trades is to average out your trades. So for example, if I were to think that if price broke this area and is going to push up higher to the next area of interest, I don't know how far it's going to go before it comes back down. So I would enter a $6 position over here, then price would continue to go higher. I would enter another $6 position over here and maybe enter one more $6 position over here. 6, 12, 18. I will be entering that trade with a total of $18 only, with $100 in my account. I'm not going to place the entire $100 on one trade, because if I were to enter with the $100 over here, the price would jump up around 4 to 5%. That's already a 5% risk, and I don't know if price is going to come back down anymore. But because I'm averaging out my trades over here, my average price would be somewhere around this area. And while price rises, it eventually goes back down. And this right here, from here, would be the perfect 4% ROI on $18 to $20. And literally in a matter of minutes, you have made 1% on your $100 account. If you don't believe me, do the math yourself on how much 4% of $18 is, and calculate the percentage of profit on $100. And that is just one trade, but imagine replicating that trade over and over and over again. And that is exactly the strategy that you can use to grow your small account into a bigger account. Now, this is one of many strategies that's possible for you to grow your small account into a bigger account. However, if you have a medium-sized account to a bigger account, there are much better strategies that is possible to use that could potentially fit a more busy lifestyle where you only have 1 to 2 hours a day to trade. But with this strategy, with consistency, discipline, and risk management, you can literally print money every single day. Sure, it may be small amounts, but eventually it's going to compound and you're going to grow your account. If you have any questions, doubts, or even criticism about this strategy, let me know in the comments below, and I'm more than happy to answer you back. And until next time, ciao.